let's just take a look at the respite that we saw on the Kenyan market yesterday. As I said, the NSE 20 rising by 1% last week. Of course, it's taken an absolute battering this past August. Foreign purchases dominated the market, and we saw that in turnover, which rose by 50%. This doesn't appear to be the trend this week, though.
Yeah, certainly. We are starting to see a bit of profit taking. Last week we had a bit of an increase. The previous week we'd lost over 5%. So last week was sort of picking up, and this week we are seeing a bit of selling. I think investors are also realigning their positions, sort of exiting some positions and getting into others, just on the back of news and so forth.
Now, TPS Serena, that company, of course, owning luxury hotels over in Kenya, that stock closed lower yesterday, 0.9% to the negative. But of course, that 4.5% rise on Friday. Decent numbers there. Earnings per share up by 42% to 1 shilling and 36 cents. Revenue up a healthy 18.4% to 2.1 billion shillings. Benefiting from the fact that it collects its revenue in the dollars as well. Are you encouraged by these numbers coming through?
I think the numbers were quite positive, and I think if you're looking at the second half, we expect an even stronger performance. Traditionally, second half is usually stronger for TPS Arena. Obviously, if you analyze the numbers for the first half, it does look quite expensive on a price multiple basis, probably trading at twice the market average. So I think on average, the earnings were quite positive.
Going forward, though, there's some positives and negatives. If you look at that EBITDA margin, that's under pressure as a result of rising energy costs. Also some concerns around tourist arrivals from traditional markets. But on the other hand, we see that tourist numbers to date are up year on year, and the company is also looking to diversify away from these traditional markets into new markets like Africa and Asia. What are your forecasts for second half?
I think you're going to see a very strong performance still. If you look at last year, they did the rights issue, and they're looking to expand both in Kenya and in Tanzania, where primarily they're located. And longer term, they're looking to enhance their presence in Uganda and Rwanda, where they basically manage the Serena chain, but not really owning them under the listed entity. So overall, it's a company which is in a good position, and it's always, the Aga Khan sort of companies tend to trade in a conservative way, and the valuation is quite generous, but I think it's probably going to catch up over time.
You say a little bit expensive, 57 shillings is the level it opens up at this morning. What level, price level would you be looking to get into the stock at?
I think at the current levels it's probably fairly priced, maybe a little bit lower because the market has generally re-rated downwards. So generally we'll probably be more comfortable with slightly lower levels.
Now, British American Insurance IPO has been undersubscribed by 40%. They expected to raise around 5.9 billion shillings, only raising 3.5 billion shillings. Now, evident is the lack of foreign participation that we've seen in this IPO. Is this all an indictment of the fact that there's low liquidity in the market? We've also, of course, had this bear market persisting for most of 2011. Or is this any company-specific factors filtering in?
I think we had quite a lot. Investors were also quite concerned just with regards to the insurance industry in general. Obviously, we're expecting the first half results to come through, and I think those would really reiterate whether investors will come in when the company actually starts trading on the 2nd of September. So I think most investors are more concerned on the earnings side. I think what we've seen in the sector, the companies have done relatively well despite the weak performance of the market, but obviously that is specific to different companies. So we'll just wait to see with the first half earnings.
Is this a stock that you got exposure to or are going to look to get exposure to as it lists?
Yeah, certainly. We do have a small exposure. The upside is limited, but yes, we do have exposure on it.
Now, the NSC relaxing rules for small and medium enterprises looking to list on the stock exchange, only needing a maximum asset base of 10 million shillings at this stage, and that's down from between 20 to 100 million shillings. But given the fact that we had this under subscription for British American's IPO, is this the right time for a small business to be looking to raise capital on the NSC?
I think if a company is looking to raise capital at this time, they'll probably be looking at lower multiples. So investors generally would not pay very generous multiples. And so if for an investor looking to raise capital, I mean, generally interest rates are high in the economy. So if you're looking to raise capital, then the valuations will have to be a bit lower. I think we'll probably see listings probably by introduction and maybe exits or when valuations improve or further capital raising when valuations improve. So I think on overall it's positive, but I think the impact is going to be limited in the short term.
Now let's take a look forward to Friday, when East African Breweries is expected to release its full year results. Majority of revenue still coming from Kenya Breweries and UDV Spirits in Kenya. So of course, still very based on what's happening in the Kenyan market. There's some concerns about the new Alcohol Controls Act. Of course, disposable incomes under pressure as a result of the drought. What type of growth in earnings are you factoring in?
I think the underlying business will face quite a bit of pressure. I'm not sure whether the transaction in Tanzania will be included in the full year earnings. If that's the case, the carrying value was a little bit lower than what they had in their book. The value was actually a bit higher than what they're carrying in their book, so they could have a gain there. But on overall, we think the underlying business is going to face quite a bit of pressure.
Are you buying the stock at the levels it's trading at this morning, or would you be looking for it to retreat slightly lower?
I think we're looking for it to retreat a bit lower. I mean, if you look also at the financing side of the transaction, where they're going to be buying back the 20% stake that you alluded to a bit earlier, that is held by Sub Miller, that capital raising is going to be negative for the stock, and especially given the underlying business being challenged. And you combine that with potential new competition in coming months, it all points to a likely lower valuation going forward. In fact, it's still trading at higher multiples than the market. So we would be looking to lighten on it at this point.